Hi, everybody. This is Gary Dean, and this is our video report for Tuesday, September 27th, 2016. I want to thank everybody that registered for the webinar today. I'll be sending out the recorded version of it if you want it. If not, just delete the email. But in any case, I appreciate it. We got to our 250 marker, so it really helps us out, and we are thankful. So yesterday, pretty much yesterday, I was saying, I wouldn't be looking to be pressing or adding any new shorts. And even though I believe the market is heading lower, and I don't believe these are the lows, if you got short today at 2140, you're in a lot of pain because you're 20 points underwater, and that's why you have to be really say picky with where you're going to either short or go long. And it's that's just that when the S&P starts following the 15-minute charts like it is, you're going to get these massive moves up and down, and it's really hard to trade unless you're fast, and you got to take the any kind of big picture view out of your head and really just trade the actual move, get out, and then wait for the next move and continue to do that. And when you're not in a trending environment like we are right now, we were trending here. It was going up. Now from this area we've just been consolidating. But when we start getting the big moves like this, all you do is you take profits and then you look to re-short, take profits. Or if if you want to just go long, then you look to buy at support and sell at resistance. Because when you try to hold for a bigger move, what happens is if you have some nice gains here, they end up getting wiped out. So in this environment right now, you have to be a little bit quick with your trades, and it's not fun. I mean, it is fun. I like it better than when we have these melt-ups, because it gives everybody a chance to actually make some money on trades because there's volatility in the market. So the daily chart here with the bearish divergences is really having me question how much higher this market can go. Even if they take out these highs, I don't know how long they're going to be able to sustain this. And really the main reason is when you look at a weekly chart here, there's enough waves to sit there and say we're going to be anticipating some type of wave 2 to the downside. Now again, this may not be complete yet, and they may have to try higher. We're going to have to wait and see. Now we don't really have bearish divergences on the weekly here, but we had them this entire time here, and it should have been more of a drop than what it was. So that's what is kind of leading me to believe that even if they head higher, there's more points probably to the downside than there is the upside, even if they make new highs. So let's get back to the daily. So we have the bearish divergences. It makes things really, really dangerous as far as just trying to buy and hold, because you're going to get some big moves back and forth. So if we take a look at the 60-minute chart here, we didn't have any bearish divergences at this high. Well, we not really. No, let's just say we didn't. So that would leave the door open that they're going to come and take these highs out and maybe close this gap here or do whatever. But it leaves that door open. But we didn't have any bullish divergences here. So the 60-minute charts, they're not paying attention to them as far as looking for divergences. When you get this kind of trade, it makes things a lot easier, because here you can see the technicals are moving up as the S&P was heading down. Don't short, and this is what happened. But when you don't get these and it starts following a 15-minute chart, it makes things really hard, because this pattern right here is saying that, hey, it's anticipating a higher high than this, and being we don't have any bearish divergences, this is saying that it's expecting a lower low. Now, if we just kind of zoom out, you can kind of see this triangle that's being formed, and that's what it looks like the algorithms are kind of programmed. So if that is the case, then what you're going to have, well, the first, say, obstacle is going to be the bulls have to get across this 2168 level. If they do that, that's when you leave the door open that they're going to make a run for this 2178 and go to the top of the triangle. Now, what may happen is maybe they do break through this a little bit and trap some traders that are going to take this triangle and say, okay, the S&P is heading up to 2250, 2260, and then from there pull the rug out, because we've seen them do that often. And like I've been saying, with the uncertainty with the presidential elections, I'm not sure that this market's going to be able to blast higher. So that's what leading me to believe that we're heading lower. And that's really the way I'm going to trade. That's why I'm electing to, short rallies, but you want to be pretty cautious on where you do it. And when you have profits, just take profits. So if they are following this triangle, we could see the S&P head as high as this 2179 level, but you can see that the gap right here at the 2164 also coincides with the moving average. So this is going to be, say, the tell line right here. If the bulls can get through it, then that's when you anticipate this. What we have known is whenever they run into resistance, they gap over it. So that would probably be another thing that you want to keep an eye out for, that we're going to be heading up on here. But overall, we didn't get any, they didn't really digest the overbought levels, and they only came to the mid-level. So again, it's trying to hit the throttle when you're in midair. You're not going to get that rocket move like this. You're going to it's going to kind of peter out, and that's why I'm not quite sure that we're going to be, making new highs here, and why I'm more comfortable shorting rallies. But you have to leave the door open for anything to happen. This market's been kind of crazy, and that's why I'm just trading the short-term moves. So this was the bullish divergences from yesterday, right into support zone 1. From that, we had a nice rally. It looks like it's just forming a bull flag there, so that would leave the door open. Now we're just going to consolidate and head up. But what I wanted to show you is on a 5-minute chart, we actually are seeing some bearish divergences. So what it tells me is that we could see some weakness tomorrow, maybe at the open, come down, test this 2153 level, find support, and then come back up, possibly to close the gap at the 2164, or possibly even come up to this 2176 level. So that would then most likely set up some bearish divergences on the 15-minute chart. And if they take these highs out here, then we're going to be setting up divergences on the 60-minute as well. So right now, I'm again, even with the big move today, I'm kind of left neutral, like where I can give you a reason why we're heading up here, but I can also give you a reason why we're heading down. And I just think the bigger picture is going to be, there's more points that are going to be made on the downside than the upside. But like I said, you have to be pretty picky on where you place your trade. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.